It's about that time of day again. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. It's Monday evening, September 19th, 2016. We're back to the action after last week's quadruple witching, and with the FOMC announcement only 2 days away, we're seeing a lot of trading ranges on the chart this evening, which means we have a plan for tomorrow's session. Crude oil and the S&P are both trading at the lows of their ranges. Gold is smack in the middle of a triangle, and the euro is trying to develop into a trend, but it may also fail back into its range as well tomorrow. No matter what happens in tomorrow's session, we've got a great plan of attack. I've got another great newsletter in store for you guys and gals. Remember though, before we jump into our charts tonight, the only place to watch the full-length version of this nightly newsletter is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry. There's a link in the description of the YouTube video. Follow that link and join me on the blog at Sideways Markets for the full-length version. While you're here, don't forget, we have a mailing list for our nightly newsletter. Join the mailing list in the upper left-hand corner, and I'll send you an email every evening when our nightly newsletter is ready to be watched. Below the video tonight, you can download all the charts in tonight's video. How easy is that? Have those charts ready on your computer for tomorrow's trading session. And of course, don't forget, I got a free pass for you, upper right-hand corner here. Grab your free pass if you're not a member here at School of Trade and you'd like to come out and join me as a guest for a few days this week in the trade room. I got a free pass for it in the upper right-hand corner. And then don't forget, you're going to learn more with me in 1 week on my free trial than you will anywhere else on the interwebs. You can learn more about the who, what, where, when, and why we're considered to be the industry leader in day trading education and professional grade strategies. Join that trial membership on the right-hand side of the website. Learn more about what it means to be a member, read member reviews, and of course, we got some great frequently asked questions there on the blog. And of course, if you have any questions for me, I'm always here standing by to help you guys out, right? 24/7, 365. Hope you guys had a great weekend. Boy, we had an incredible week last week. It feels great to be back to the desk here this week here. We got a busy week. We got some major news on the schedule here in just 48 hours time. Tomorrow, of course, is Tuesday, September the 20th. We have no major news, right? No real major market moving news here. We do have some small stuff, right, coming from the RBA tonight at 9:30 a.m., but I don't think we're going to see much market movement off of those. Tomorrow, though, we're looking at the Bank of Japan announcement, right, talking about interest rates, and of course, they're digging into those negative rate territories here. Get the B of J rate announcement tomorrow morning, right? The, of course, policy announcement tomorrow morning. That will typically happen early in the London session tomorrow, sometime between midnight and 3 a.m. If you're trading the London session, be aware of that, or Asian or London session, be aware of that tomorrow, right, in the overnight session. Other than that, though, we get some real minor news at 2 a.m. We get the housing starts at 8:30. And, of course, tomorrow night we'll hear from our friends in Japan once again at 7:30 p.m. So really the only real meat and potatoes here tomorrow is going to be that Bank of Japan announcement. They always try to keep us on our toes here. It's usually going to be sometime between midnight and 3 a.m. So we'll hear more from the BOJ sometime before London, so be aware of that. And then, of course, the housing starts tomorrow morning at 8:30 a.m., but that's pretty much it. Assuming that Abe doesn't put his foot in his mouth, right, in the overnight session, assuming there's nothing too crazy that comes out of the Bank of Japan overnight, all we really have tomorrow is housing starts. And really at this point, we have to remember that tomorrow is the beginning of the FOMC meeting. Now, tomorrow we shouldn't see too many fireworks. That'll be, of course, in Wednesday's FOMC meeting announcement. We'll talk about this in tomorrow night's newsletter. But typically the day before, right, any major news event, we talked about this last week for quadruple witching on Friday, typically there is a self-fulfilling prophecy that kicks in that 24-hour period before a major news event. People don't want to take big risks going into big news events, and a lot of times we end up seeing some trading ranges, and trading ranges are definitely what we're seeing here tonight. So if I had to guess, it looks like a lot of folks here are already kind of battening down the hatches, if you will, right, kind of finding some shelter ahead of the FOMC announcement on Wednesday. So we are expecting to see, again, not much news tomorrow, and again, 24 hours, right, as of tomorrow's session ahead of the FOMC announcement. Not expecting to see a lot of fireworks, but we're definitely expecting to see some interest in those trading ranges for tomorrow. So not a lot of news on the calendar. And again, all eyes and ears. Late in the day tomorrow, we'll be shifting to the FOMC announcement. So mark your calendar for Wednesday afternoon. Let's jump into crude, S&P, gold, and euro. First of all, crude is bearish, but trading at the low of a possible range this evening. And I say possible range because if you're a client of mine, you're probably looking at this going, where's the range, right? Where's the double tops? Where are the double bottoms, right? Where's your triangle? You get a great triangle in gold, but this is one of those scenarios where you really, and this is one of three markets today that we have to be a little bit creative right now. These markets are quite sloppy, whether or not it's because of the violence that came over the weekend here in the U.S. My of course hearts and prayers go out to anybody affected by the violence in New York and New Jersey over the weekend. It's tough to really get a grip on why, and the why doesn't really matter too much. As human beings, we always kind of want to quench that thirst of why, but in all reality, we can see the bears definitely have short-term control. Well, let's jump right in, right? So it's a definite possible trading range. I'm going to go with a range right now, which means the sellers need to beware trying to sell into the low of this range. And buyers need to see some more proof before they can start buying these lows. The spike in channel, in my opinion, on this chart is the most important clue for the sellers, which tells them to look for traps above the prior swing highs, up in that correction zone around the 44.10 area. Right? Looking for traps above prior swing highs, selling the correction zone, or they need to see a very strong breakdown below last Friday's 43.44 low to continue the move lower. We have to assume that low at 43.44, which is about Friday's low, we have to assume there are buyers waiting down there. So if the sellers don't get this price to pop higher to sell back down, the ideal situation, look at the size of the wick right now on this chart, right? Does this make you think that there are sellers that are trying to sell into that breakout? No. In fact, it looks like nothing more than buyers. Sellers buying their way out of any short positions and buyers calling this a range bottom. So, really at this point now, the sellers either have to get it selling right off that high in the correction zone, or they've got to literally run through that low and try to really disrupt those buyers and continue this move lower, right? It's tough to be a seller here right now because you're at the lows. Now, about the buyers. Buyers, on the other hand, need to be aware that any move higher will likely be sold initially because of that bear spike in channel. So they need to see a successful breakout that can hold the pullback above that correction zone. This is not going to be easy, right? They got to see a nice strong move, hold the pullback for move back up to the highs tomorrow. So this is going to be a tricky one. The S&P is in very, very close quarters here with crude oil. And kind of looking at this today, the way this market feels right now, it feels like whatever got under the skin of these markets, and you saw a lot of this today across the equity markets, energy markets, it felt like the market kind of just jumped. People bought the violence, bought the fear. We don't see this very often. There's a lot of complex things going on. I'm not going to try to make sense of the why, like I said earlier. But what it feels like everybody woke up in the London and the U.S. sessions, and they were priced so high here already. They said, well, I'm not going to buy this high right now. They get this great gift, right? This move lower. Right, which of course, if you were with me today in the trade room today, right, that's exactly what we were looking to participate in, right? Beautiful little short-term spike in channel into the correction zone. It was a beautiful setup here, and then back to the highs. We get to the highs and we don't see any interest here, right? You'll notice they barely get that new higher high there, right? It's a one tick new higher high, and they dump this thing. So at this point now, if you're a buyer, you're completely beat up, right? Trying to keep it going. Buyers have zero proof, and we run back into now a bear spike in channel. It almost feels as if whatever happened, you kind of finished my sentence earlier, it almost feels as if, this is the same thing for the S&P, it's almost as if the buyers came out so aggressively earlier that by the end of the day today, this is kind of like the start of the week. You know, it almost feels like because of the way the day started, traders were never really able to get in at a great price. They were never really able to get themselves situated for the week. And here we are back to where the day began. It's almost as if it's kind of like a mulligan, right? A redo, restart now going for the rest of the week. We also have the FOMC announcement coming 24 or 48 hours from now, right? 24 hours after tomorrow. And that's some, backwards logic there, right? But 2 days from now, we have the FOMC announcement. And of course, the last FOMC announcement before a big pending election here in the United States, unless you're living under a rock, right? Everyone's thinking about interest rates right now. So we're looking at this as a trading range that definitely has a bear bias to this move going lower, right? That spike in channel. So how are we going to trade this? Well, whenever we have a range, we look for overshoots, right? And you can see breakout, failure into a breakout, right? Overshoot into overshoot. The pendulum swing, right? You'll see this again on the S&P. Pendulum swings up, pendulum swings down. So this may not be the most polished trading range, right? This may not be the most easy to define trading range, but the old saying, right? If it walks like a duck, it sounds like a duck, it smells like a duck, it might not be a water buffalo, right? It's probably a duck. So it feels a lot like a range. And then of course you see this big wick down here, and that really makes it difficult. I know it's a low of that channel, but it really makes it difficult not to continue now to think we're inside of a trading range. Just wait to see the S&P. The S&P is very similar. In fact, the S&P looks like a train wreck, right, compared to this market. So where did it go from here? Well, if you want to be a seller, the hard part is now I can't sell this low, right? I can't sell that low. In fact, we can assume now that buyers are lined up here, right? Now they know more to buy into that move. If we do end up breaking down now, because I would imagine there are a lot of buyers who have their stops waiting down here, right? Buyer stops. There are a lot of buyers who saw this big move higher, right? They bought as it went lower, and they've got their stops sitting below that 43, 44. And I would imagine unless they're intimidated out of it, right, they'll probably buy more, right, as it goes lower. So if I'm a seller right now, that correction zone is my best friend. If I'm a seller right now, ultimately there are 3 spots I'm looking for a sell. 1 in the correction zone, 2 back up to the high of that range, and 3 down below that 43, 44. If you're a bear right now, I'm looking for, first of all, buyer failure from the correction zone right back down. That's the short-term trade. Don't get greedy on this. The low of the range is at 43.66, as we know right now, and so this will be a move up, failure, and then back down to that 66. Okay, we're not expecting this thing, at least not right now. Again, we may know more by middle to late morning tomorrow once we kick things off in the U.S. session. But as of right now, we don't know enough. And that might be a little bit of what tomorrow is. Tomorrow might be kind of a wait and see, because as I said, the way that the week started off, the way that I feel right now, the way these charts look tonight, it may just be we're going to start over tomorrow and see what the first few hours tomorrow bring. I wouldn't be surprised if a lot of traders do that tomorrow, just because of just nothing really fits perfectly here right now. Okay, so seller, right? Sell the failure, back down. Seller, sell the failure, right, back down. These are easy, right? If you're a student of mine, sell the correction zone, sell the high of that range. But what if we tumble lower? This is where we have to see a strong breakout. How strong? It needs to be strong enough to get through that 44, bring that moving average down, and ultimately get that moving average below this overshoot, right, which just happens to be the low of last Friday. That's going to require some serious strength. And so as this price, if it goes lower, right, if it goes lower from here, we really want to be careful as bears trying to sell into it. What if you're a buyer right now? The hard part if you're a buyer now is the fact that this is a bear market. I know we're at the low of the range, but the range is a little bit foggy. I think the clearest thing on this chart tonight is this bear spike in channel. So really, if I'm going to be a buyer right now, there are ultimately 2 places to be a buyer. Way down into that low, right? Or breakout, pullback through that correction zone. There are ultimately 2 spots right now to be a buyer. What would make this so much easier is if we just saw this market torch that correction zone, right? Almost